Why do so many traders struggle? Why is it so hard to find consistency and earn the money that you want? The painful truth is that trading is extremely hard. It's reflected in broker statistics and studies that show that 80% of all day traders quit within the first 2 years. Another issue is a study from Barber and Odeon showed that traders with 10 years negative track record continue to trade. This is a clear signal that people keep trading based on the dream that one day they will earn a lot of money and live that beach life. If you trade based on hope, based on the lottery mindset, then you will never evolve and become the trader that you want to be. Do you remember Einstein's quote, "Insanity is doing the same thing over and over and expecting different results"? Don't do the same thing. Become a perpetual learner, a person who seeks to improve every day. With that said, here are 5 essential lessons. Okay then, lesson 1. There is no one-size-fits-all trading strategy, so develop your own. Some people, they do very well with trend following and momentum. Others might do extremely well with reversal plays or looking at fundamentals. What works best will depend on how you view the market and the methodology you use to protect capital and look for new opportunities in the market. So you have to work on developing a style that makes sense to you and continue to tweak it if it isn't working as well as you would want. But at the same time, you have to find a style that makes sense in an environment that is often unpredictable and inconsistent. That is the key to navigating the markets. Trading is quite challenging because what works best is always changing, right? Reversal plays might be best at one point or momentum trades at another point. But you have to remember that you don't want to change your strategy constantly, but it's necessary to have a style that can adapt to the ever-changing markets. Lesson 2. To be a consistent trader, you need processes and routines. In my early years of trading, I was very inconsistent. ATR, moving averages, Bollinger Band, candlesticks, and whatever else I could get my hands on were all used in my trading. Simply put, my trading performance was sporadic, was random. So how do you become a consistent trader? Well, step 1, develop a trading plan. Step 2, develop processes and routines that ensure you follow your trading plan. Your processes should consist of a pre-market process. This is your preparational approach to generate fresh trading ideas and do your analysis. A trade entry process. Here you should have a set variables that you can tick off based on the market information you're interested in, so you don't react to irrelevant information. A trade management process, where you have procedures in place for how you scale in and out of positions, when to move your stop loss, and when to exit or consider exiting positions. And last but not least, a review process. Have a detailed guide of how you evaluate your trading. What did you do best? What did you do worst? Be proactive and seek to improve yourself and your trading. The fact is this: if you do random things, you will have random results. To become a consistently profitable trader, you must have a professional approach and therefore build a consistent routine around your trading that you can track to identify the mistakes and lacks in your trading so that you can learn, improve, and optimize. Lesson 3. Predictions and forecasts are a waste of time. Good trading comes from identifying the market in real time and applying sound risk management and take profit strategies. It's an understanding that you don't know the future and how you mitigate the consequences of being wrong about your actions in the market. The problem with predicting and forecasting the market lies with what these terms indicate and do to our psychology. When these predictions aren't correct, The trader feels it deeper than a trader who takes objective trades based on their chosen tools and understand, as with any business, that they could be right or wrong. Either way, it's just one trade. There will be a day tomorrow and the day after that, and so on. Therefore, don't attach yourself to prediction and forecast. The psychology of being wrong plays a big role here and is a big reason why so many traders are inconsistent. Lesson 4. Focus on market opportunity, on picking and being in the right instruments. Don't let your own biases and personal reasons distract you from missing great opportunities. Too often traders get stuck on the idea of only trading one instrument. There can be many reasons for this, right? They might attach themselves to this one instrument because they have lost a lot of money and now they want to make it back, revenge trading, or that they have seen this pair make a parabolic move in the past and they don't want to miss this move. Therefore, they keep taking poor trades, suboptimal trades based on that bias. It's important to understand market opportunity and how it can help you in becoming a better trader. You have to develop and evolve and learn to take advantage of this concept. Don't unnecessarily attach yourself to one instrument. Look for opportunities and the best one good trades out there by filtering out trades. Why narrow yourself to one instrument? There are many great opportunities out there. So diversify your trading business. Lesson 5. Don't fear losing trades. Once you embrace the fact that losing trades are inevitable, then you can deal with them quickly and without any great emotional distress. Trying to avoid losing trades will keep you from trading the instruments that offer the greatest potential for profit. You have to avoid fear-based trading because it can result in so many symptoms like losses aren't taken when the stop loss is reached, and then you allow the loss to continue, which results in larger losses than anticipated. Or trades are not allowed to develop. Unlike the issue just described, the trader is terrified of any kind of loss, right? And therefore a winning trade turns into a losing trade or a very small profit. Fear clouds judgment. In real time, when you're trading, the trader may be so afraid to lose that they don't even see the opportunities happening right in front of them. Fear may be driving you to filter out information and cloud your view if you only notice trades in retrospect all of the time. So, as traders, it's our job to come up with strategies and develop a trading plan and then rigorously test that plan for profitability and our ability to personally implement the plan. Our goal, once we have devised a strategy, is to trade in accordance with that strategy. The strategy is researched and backtested, and you have to prove it to be successful. Then wins and losses will take care of themselves. We can't bother about wins or losses while trading. All we care about is sticking to our trading plan and trading every valid opportunity our trading plan provides. This is what takes fear out of trading. If you have fear in your trading, then you still have lots of work to do.